Secrets to order flow. Lesson 3: High time frame order flow and top-down analysis. In today's lecture, we'll be talking about how you can understand high time frame order flow in each and every time frame down below, and what does top-down analysis mean. Top-down analysis is a step-by-step way of analyzing the market starting from the highest time frame and moving down to the lowest time frame. Traders use it to understand the bigger picture first, then refine entries based on smaller time frames. Here you can see the pyramid telling you monthly, weekly, daily, 1 hour, 15 minute. Here you can see we have monthly time frame telling us what direction the weekly candle will move. The weekly tells us what direction will the daily time frame move. The daily tells us what direction will the 1 hour time frame move. 1 hour tells us about the 15-minute time frame. As you can see, I have plotted out this fair value gap right here, which we call is a weekly IPR. So swing low gets taken with displacement, creates a gap, which repeatedly gets balanced. Right here on this candle, you can see in SMT forms right here. Balance is this range, goes forward, comes again in this range, balance is this range again, moves forward. What this tells us, until the market closes below this range, we are bullish. As you can see, multiple times price has balanced this range and choose this range as a point of interest to move forward. This tells us the weekly bias or the monthly bias on the month of November and October. This weekly IPR was considered as of great value for the current direction of the market. Now we move forward to the daily time frame. Price supported this weekly IPR. Now the question is, how will we know what price will do next after reaching this weekly IPR? As you can see, price takes the swing high, swing low. With displacement, a candle closes below it. This candle is in very important range, as I taught you how we can choose PD arrays to understand BPRs and IPRs. You can see price going inside this range, close above this range, moves inside this range again, goes above. This is a drawn liquidity, as you can see. Goes inside this range, moves into the drawn liquidity, moves inside another range, doesn't close below it. Right here you can see the candle that takes out the swing high, creates an FVG, so price will reach into it to rebalance it. As it rebalances, price closes above this range. Now we are expecting price to either reach it all or come inside this range to expand higher. Now we are moving lower into the 1 hour time frame, as after monthly, weekly, daily, there is 1 hour time frame which is considered the best to understand order flow, to predict order flow, what is price going to do and which direction. As you can see, this is the weekly IPR. Price moves inside it. Price moves above it. This is the daily range. Price closes above it. Inside this, we can see there is a swing high here, a swing high here. Price closes above this range, creates an FVG. We consider this FVG as imbalance until it is reached later on the next day to get balanced. Price balances this range, moves forward into the next daily range, which will be right here. And we have a drawn liquidity inside the daily range also. So this is very important. So price again moves inside this range, creates a high time frame FVG right here. As I told you in a previous presentation, previous page, price closes above this range on the 1 hour time frame. So we're expecting price to come inside this range right here. After price closes above the swing high, the candle that closes above the swing high acts as an PD array. There doesn't need to be an FVG or anything else. The range, the price range is inside the swing high that gets taken. Price moves forward. You can see price doesn't close above this daily range. Price moves lower, come inside this daily FVG, and inside that daily FVG, there's also an 1 hour PD array. So price comes inside the PD array. Price moves inside this PD array until this PD array is closed below. We will still be bullish. Price reverses from this PD array. Again, doesn't close below, but you can see the swing high gets created right here. Closed above. So this range also becomes PD array right here. Either you can choose the swing high that gets taken or the FVG. If there is an FVG, always take an FVG. If there is no FVG, you can take the swing high also. The whole candle of the swing high. So you can see price reaches inside the swing high or the candle that closes above the swing high. Again, price moves forward, closes above the range, comes inside the range, starts moving forward. Now let's move down to the lower time frame. So as you can see, this is a 15-minute time frame. Price comes inside this FVG on the daily time frame. You can see multiple times in the London session, it comes inside this 1 hour key PD array. Again, in the New York session, comes inside this 1 hour PD array and starts expanding. As it expands right here and closes above this on the 1 hour time frame, we will look for entries on the 15-minute time frame. So this time frame, we consider this time frame for entries. You can see an FVG forming right here, which is considered as an PD array as price closes above these swing highs with this candle. Also, we know how we are choosing a breaker right here. This is also in swing high. Price always takes 3 PD arrays, either order block, breaker, or FVG right here. So price comes inside the breaker, doesn't close below the breaker, closes inside the FVG, but doesn't close below the FVG. So we know we are bullish. So you can take entry at this candle right here and exit right there, or you can wait for the FVG to get rebalanced again. So on the next day, you can see price accumulates, manipulates right inside the FVG, manipulates, and starts distributing. Again, after the close above this high, the range that get close above these highs is important. So price comes and rebalances those imbalances. So yes guys, all of this will only be understood if you can do it again and again on your charts with the knowledge that I gave you. Think of these price ranges as price ranges. Think of these as some rectangle boxes that are plotted. Think of price ranges. Price ranges means numbers. So what the whole top-down schematic teaches you is that the higher time frame, monthly, weekly, daily, tells you the direction. The mid time frame for our 1 hour tells you the area of interest. The lower time frame, 15 minutes, 5 minutes, and 1 minute, tells you the entry. Simply put, high time frame equals to bias, mid time frame equals to setup, lower time frame equals to execution. Only bias and Orderflow are true keys. Everything else is just entry criteria. Bias tells you the direction, Orderflow tells you the intention, and rest is simply timing the entry.